In this video, I want to talk about how I use position sizing to manage risk. In my opinion, position sizing is one of the least talked about but most effective tools you can have in your risk management toolbox. What I mean by position sizing, of course, is really just the size of a specific investment within a larger investment portfolio. If you're new to my channel, my name is Jared Ayers. I am a CFA charter holder, and I've created this channel to share with anyone who's interested about the strategies, thought processes, and techniques that I use to invest my own money in the market. I've been doing this for 20 years. I have a pretty fantastic track record against what the market has been able to produce, and this is my forum to share how I do that. When thinking about position sizing as a risk management tool, there really are two main questions that I ask, and I think other people should be asking themselves as well who invest for themselves. That is, number one, what is your actual investment strategy? And number two, what is the risk of loss of the securities that you hold as part of your strategy? Before you can actually manage any risk, you do have to understand what the strategy is and what the risks actually are. So those are really key and important things to think about before you kind of jump in and decide your position sizing up front in your investment strategy. In terms of equity investments, I invest in a highly concentrated portfolio of high conviction investments, securities that have a high potential of earning a very high return for me. I don't want to hold a lot of them. My own ability to research and follow those companies and put backstops in if I see fit means that my ideal portfolio is I have a total of only 8 companies, all high conviction, all have a very high probability of earning at least 20% a year for me. And in that case, then my actual positions size for each one of those positions would be about 12.5% of my total equity portion of my portfolio. So that's very, very high. I don't recommend, and I don't think that most people would ever consider that to be a prudent approach to investing. But that would only be in the instances where I have enough conviction and believe enough in the company where I would actually go to a full position in it. So there are other things that you do want to consider when deciding on individual positions, even once you've decided what a full position might look like for you. Some of the things I do look at when I'm evaluating companies in my portfolio or prospective companies that I'm going to add to my portfolio is really what things could create more risk for those companies. So the first one I actually look at is, and you've heard this one before, in my top 5 selection criteria is market cap. Same with position sizing. Market cap can be an indicator of greater risk, especially on the smaller end of things. So if you've got a company that's say 50 to even 250 or a $500 million market cap, that's a fairly small company, and it just sheerly by its own size, there's an inherent risk there, and so that is enough to warrant kind of reconsidering whether that deserves a full position, in my opinion. Another item that I actually look for is the management team. So how experienced they are, how much of a track record do they have, and so that's another piece to the puzzle. If they're if the person in charge is a brand new CEO, versus if they've had a track record of creating massive value for shareholders and then being able to exit for those shareholders at say 10 or 20 times what an original investor would have put into the company. That's a pretty hard thing to do, and that's somebody you want to pay attention to in terms of whether or not they deserve more of a position in your portfolio. Another item is the age of the company. So the companies that obviously have been around for a very long time, say 10 plus years, are probably have a better chance of surviving and continuing to exist into the future. Companies that are fairly new, in the last, say, 1 to 5 years, will often carry an inherent risk. Usually they're high growth if they're just starting up, unless they've been spun off from another larger company. That is another thing to consider as well. A few of the ratios that I look at as well with respect to debt is another area that I think warrants looking at in terms of deciding whether you want to make a sizable position in a certain company. The first ratio is a pure debt to capital, so what percentage of the total capital is represented by debt. Another one is cash to debt, so a company may have billions and billions of dollars in debt, but if their cash position is actually larger than their debt balance, then that is basically a net cash position and they are just going to be likely just fine. If the opposite is true, where they have 10, 20, 30 times the debt level as their cash, you may want to look into a few things in a little bit more detail to decide how much risk is there. The next one, of course, being free cash flow to debt. So how much free cash flow does the company generate on an annual basis in terms of, and that will drive their ability to service their debt. So if they have, say, $10 billion in debt, but they're able to produce $5 billion of free cash flow annually, even if they don't have a large cash balance, that's pretty good in terms of a risk-reward ratio. Something that you again may want to consider in terms of deciding how much risk is there. That's a pretty decent one. If the company does pay out dividends, that's another area that you may want to look at. I certainly am interested in that. If the payout ratio is, say, close to or exceeding 100% of free cash flow, then that can be an issue. It's not always easy for companies to claw back dividends once they have reached any level at all, basically, without the share price cratering. So that's another area and thing that I often think about is, okay, how much are they paying out of their cash flow? What does that mean potentially from a risk standpoint as well? And finally, growth prospects. The company, what kind of industry is it in? Is it relying on increasing market share in a declining industry? That can be sometimes a pretty tough thing to do, versus if a company's in an industry that is organically growing, because it's sort of the next wave of either a trend or the way the world is going. So that's another area that will probably help drive the company's ability to generate cash, and then of course how much risk it may carry, and of course then how much of a weighting it deserves in my portfolio. So that's kind of the main areas I consider from companies that I'm looking to invest in on the equity side. In one of my previous videos, I did talk about the use of leverage and using options as a means of introducing leverage to my portfolio. One note on position sizing and options, as I did mention in that video, is that options inherently can expire and therefore can be worth nothing even after you buy them, right through to expiry. So for me, they deserve a very, very cautious stance in terms of total position. All of the options together in my portfolio, I don't want them add up to more than 2% of my entire portfolio, and any single option is only allowed to be as large as half a percentage point of my entire portfolio. So and of course, as I've mentioned before, that's really so I can control the amount of downside I have in those options. And of course, I would never do an option investment unless there was a very significant upside, 5, 10, 15, 20x that I have a fairly high conviction in. Of course, you can never predict the future, but you do make bets on the things that you believe are controllable and potentially that the indicators are telling you are moving in basically a certain direction. So that's a little idea on position sizing and options as well. I hope you found this video on position sizing informative. Please let me know how you use position sizing in your portfolio in the comment section. I'd love to hear about how you use it. If you are new to my channel, please by all means hit the subscribe button if you'd like to see more, and let me know exactly what it is you'd like me to cover in future videos. And if you do like this video, please by all means hit the like button as well. So until next time, thank you very much for watching.